housing market crash has already started. Or has it? Is the market going to crash in 2020? Or maybe not until 2021 or even later? Today I'm going to be analysing the current housing market data and determine whether the housing market is already crashing and potentially being covered up. There's so much data out there at the moment on the housing market and so many mixed messages. So hopefully I can try and demystify the housing market for you and let you decide whether the market is currently crashing or is about to crash. As always guys, if you've got any questions about anything I say today, be sure to drop it down below in the comments and I'll answer it whenever possible. Now let's get into the video. I'm going to split this video into two chunks. In the first chunk, I'm going to cover what the current market data shows us, what the media is telling us, and what estate agents are currently telling us. In the second part of the video, I'm going to do some analysis on the current housing market situation and what could happen in the market. The Housing Price Index, calculated by the Office of National Statistics, suggests that as of May 2020 that there was a 2.9% rise in the housing market over the past year. And this is really interesting, and I've got a few theories as to why this is. Obviously the world isn't doing too great at the moment. The pandemic has had a grip on the entire world, not just in the UK. Infection levels were at their highest ever seen in May, and yet the market was still rising. Considering that the pandemic levels have reduced since May, it's likely that house prices have continued to rise in June, July and August. Nationwide suggests a 2% rise in August alone and a 1.8% rise in July, although this is yet to be confirmed by the Office of National Statistics. I suppose what's caused this rise in the market is that lockdown restrictions have been relaxed. Back in April, the market was frozen and practically no one could move even if they wanted to, and I imagine a lot of people got uncomfortable in their current situation. As a result, this caused the demand for properties to rise, but yet the supply of properties was, well, zero because the market was frozen. This obviously is going to cause a lot of pent-up demand and frustration among the buyers. The market was unfrozen in May or June time, and this caused sales volumes to fly. People were paying literally anything they could to move, and obviously this caused prices to increase dramatically. However, I think it's also important to realise that this is on a case-by-case basis. There are a few properties close by to me that have sold for way below their asking price. I guess the homeowner must have just been desperate to move, maybe they lost their job or were going through some family problems and were willing to take like a £20,000 discount. Now I do want to quickly cover what the market value or what the true market value of a property really is. Some people might say, well, that person just got a great discount. The home was worth £240,000, but they bought it for £220,000 and therefore secured themselves a £20,000 discount. But some people might say, well, that home was only ever worth £220,000 because that's what a regular person was willing to pay for it. The seller assumed that their property was worth £240,000, but really it was only ever worth £220,000 and the seller just assumed wrong. And therefore the buyer purchased that property for market value and didn't get a below market value deal because below market value doesn't exist, it's just what someone's willing to pay for that property. And technically I think both people are right depending on the circumstance. Let's assume for a moment that we have a road and all the properties on that road are a 3-bed terraced house, the exact same shape, the exact same size, same number of bedrooms, same number of rooms, deadly identical. And the most recent sale on that road was in 2010 for £200,000. And let's say you own a home on this road and you assume that it's worth £240,000. But obviously that's only an assumption because the most recent sale was in 2010. So you've got no concrete evidence for that assumption. And you decide to sell it to someone and they're willing to pay £220,000 for it. Well, the home was only worth £220,000 and you just assumed wrong because obviously £220,000 was the amount that someone was reasonably willing to pay for it. But let's assume that the most recent sale was in 2019 and a home was sold for £240,000. And actually let's assume that 4 homes were sold all for £240,000 because they're the exact same size. If a few months later you decide to sell that property for £220,000, well, the person's actually got a below market value deal because the properties are reasonably worth £240,000 because obviously there's a lot of concrete evidence of previous sales and you've just sold your property for a discount. The home is still worth £240,000, but you sold it for £220,000 because it was like a forced situation. Maybe you lost your job and just desperately needed to get rid of the property. So therefore that home would be worth £240,000 in normal selling conditions. And therefore, even though the general market across the country has increased by a few percent, there might be some certain roads or some certain pockets of areas where lots of homes have been sold under forced circumstances and therefore don't really follow the general trend. It doesn't mean that the Office of National Statistics is wrong or that that entire city is plummeting in value. It just means that there's a few anomaly sales. If you're enjoying the video so far, be sure to drop a like down below and subscribe to the channel if you haven't already. I've also recently activated membership on my channel, so if you really enjoy the content that I make and want me to keep making more, then feel free to support the channel if you so want. It's only a few quid a month, about the price of a large Starbucks coffee. The demand for homes is also increasing because of the stamp duty cuts and the mortgage holidays available. People are seeing this as a once in a lifetime opportunity to buy a new home without having to pay stamp duty. The Guardian are saying that confidence in the housing market is at an all-time high. But just remember that this is what the media is telling you. This is what estate agents are telling you. And obviously they're going to say that everything's hunky-dory because they don't want people to be scared. They want to keep selling houses, they want to keep getting their commission, and they just want to tell you that no, don't worry guys, everything's fine. We're not really in a recession. And you could believe this, but what's the truth? So firstly, let's talk about why the prices of homes haven't fallen yet. And it's because the housing market is basically being propped up. Furlough pay has prevented a lot of people from losing their jobs that would have lost their job. And therefore they also haven't lost their home, which means there hasn't been a huge flood of supply of homes onto the market. And this is obviously a good thing, because losing your home and losing your job is never a good thing. But at the same time, it is kind of falsely propping up the housing market. The mortgage holidays are also kind of doing the same thing and just delaying the inevitable loss of people's homes. The stamp duty cuts are also kind of falsely accelerating home sales as well. Obviously they are generating real sales, but it's obviously kind of like inflating the sales data and making it look better than it really is because obviously there's this incentive there. The interest rate cut is also kind of incentivising those people that wouldn't really go out and buy a home to go out and buy a home just because there's better rates and no stamp duty. All of this together means that people haven't really lost their job, and because they haven't lost their job and also because of the mortgage holidays, they've been able to save more. And because of the stamp duty cuts, they've been incentivised to go out and buy somewhere new. So they've bought a home and haven't lost their job. And that's why so far, house prices haven't fallen yet. But actually, hang on, doesn't that sound really bad? People could be on furlough, just about to lose their job, but because they've been saving some more money and the stamp duty cut, they've gone out and they've bought a bigger and more expensive property, even though they could literally be losing their job next month or something. So what else is there? What's the truth behind the housing market crash? Are house prices going to continue to rise forever? Or are they just inflating a little bit more before a massive crash? So let's go and look behind the available data, shall we? The furlough scheme is now slowly tapering off. Employees are still being paid 80% of their original salary, but the government is now not paying employers PAYE and NI expenses. Also, the government is now only providing 70% of this 80%, and therefore employers now have to cover the remaining 10%. As of October, the government will only be paying 60% of that 80%, leaving the employers to pay the remaining 20%. And at the end of October, the furlough scheme will officially end. And one of two things will happen. Option A, the pandemic numbers are so low that all the lockdowns across the country get lifted and everyone goes back to work. Let's assume that not too many businesses fail and therefore pretty much everyone gets their job back at full pay. This means that the people on furlough will get to keep their jobs, and because they've kept their jobs, they'll get to keep their homes. And because they've kept their homes, there won't be a giant flood of homes onto the market. So therefore prices might flatten out a little bit as the pent-up demand subsides, but because loads of new homes aren't coming onto the market, there won't be any housing market crash and the recession will be over. Great. But obviously this is a very, very pessimistic view. Option B, which seems more likely at the moment, is that the pandemic numbers continue to rise and the whole country and maybe even the whole world goes into a second lockdown. This would obviously wreak absolute havoc on businesses because they'd have to close but continue to pay the employee's salary because the government wouldn't be supporting it. Obviously they wouldn't be able to do this and tons of businesses would go under meaning thousands and potentially millions of people lose their jobs. And obviously if thousands and millions of people lose their jobs, they'll also lose their homes, which means a giant supply of homes onto the market, and people will be listing their homes cheaper and cheaper and cheaper just to get it sold, which will mean a massive housing market crash. If you've made it this far into the video, be sure to drop a comment below saying the words havoc, just so that I know that you've made it this far into the video. Now, ignoring the pandemic for one moment, what else has happened or could happen in the housing market causing it to crash? Well, firstly, as a result of the pandemic, tons and tons of lenders have increased the interest rates on their products. They've also removed some of their riskier products from the shelves. There are some lenders still offering 90% LTV mortgages, but this number has decreased massively as the banks try and protect themselves from this increased risk. Therefore, lenders are now lending smaller amounts and charging more for it. So that's obviously going to reduce their risk of default as they're not lending as much. And even if people do default, well, because they've increased their prices, that means that they've generated more interest from everyone else. So it kind of evens out if people do default. This is obviously great for lenders as it means that they can continue to make money. But it's obviously bad for us regular people because it means that mortgages and just lending in general is more difficult to get and more expensive. Because mortgages are harder for us to access, it means that the demand for homes is going to fall because obviously people just won't be able to access that lending to buy a property. And that means that the price of properties is also going to fall because the only sales will really be made to investors that have the cash on hand to sweep up a great deal from anyone that's desperate to sell. On top of this, confidence in the market will fall as well. And that means that people aren't going to be buying homes unless they're really confident that they're getting a great deal. And this means that it's likely that a lot of the properties being sold are going to be sold at quite a discount. You could also say that the housing market's been overinflated by the government Help to Buy equity loans. This is where somebody that has a 5% deposit is lent a further 20% by the government to make a 25% deposit. And this means that the people that don't really have much cash can still go out and buy a property, further pushing up the prices of properties. All of this together means that the housing market could have much further to fall than back in 2008, because obviously a lot of measures have been put in place to prevent a crash. But this has also kind of subtly been inflating the property market by selling more properties than that would really be sold and selling them for higher prices because people have had access to additional borrowing that they never had before. And therefore, even though the housing market isn't crashing right this second, it's looking ever more likely that the housing market will crash at the expiration of furlough or shortly after, when tons of people lose their jobs and tons of houses flood onto the market. And even though the economy as a whole has been crashing, because obviously GDP has been crashing because businesses have been shut, this hasn't really pushed through yet to the housing market because of the measures put in place to protect the housing market, such as the furlough pay and the mortgage holidays. But obviously this is just really prolonging an eventual crash. These measures that have been put in place are only really temporarily propping up the housing market, rather than permanently securing it and preventing it from a crash. I think that a number of businesses are going to try and operate normally in October at the expiration of furlough and re-employ everyone. But obviously if there is a second lockdown, then most of these businesses are going to really struggle and potentially close, causing massive increases in unemployment. Therefore, I do think that if there's a second lockdown, the housing market is likely to crash in early 2021. But obviously if the pandemic is resolved around the October time, everyone will be able to go back to work and I don't really see much of a crash at all. As always guys, if you've enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!